Tesla is no longer just an EV company. The real story is AI infrastructure, and it's happening faster than most investors realize. Tesla is quietly building the chips, the data engine, and the product stack that could power robotaxis and humanoid robots at global scale. If you're still valuing Tesla like a car maker, you're likely missing the point. Hi, this is Ken. Welcome back to Life in the Future. Today, I want to connect 4 updates that look like separate headlines, but together they tell one story. Tesla is moving from an EV company with great software to something closer to an AI platform with multiple product lines. Here's the benefit for you as a Tesla investor or long-term fan. By the end of this video, you'll have a cleaner framework for what actually matters over the next 12 to 36 months. Not just deliveries and margins, but compute supply, real-world autonomy data, and whether the robotaxi narrative is getting priced in too early or still underestimated. Let's start with the foundation. Chips. Reports say Tesla has been discussing with Samsung Electronics the expansion of production for Tesla's next generation AI chip, often referred to as AI6. The numbers being floated are the key signal. The current plan is roughly 16,000 wafers per month, and Tesla is reportedly pushing for something like 40,000 wafers per month. If that scale-up is real, it's telling you Tesla expects demand for AI compute to explode, and not in a vague AI is the future way, in a concrete operational way. More wafers means more chips means more inference and more training capacity, and that means faster iteration cycles on autonomy and robotics. In the AI race, speed is compounding. If you can iterate faster, you don't just improve, you pull the whole frontier forward. And here's the part that matters for investors. AI strategy is not only software, hardware supply is the bottleneck. Everyone wants compute. Everyone claims they have the best model. But the companies that actually secure consistent, scalable compute capacity are the ones that can deliver products at the pace the market rewards. Now, the risk. There have also been reports that Samsung's Texas semiconductor ramp has faced delays. And I want to be careful here because one planned delay doesn't automatically mean Tesla is stuck. Tesla can multi-source, redesign, shift timelines, or prioritize certain deployments. But the risk is real in one way. If Tesla is serious about aggressive AI growth, it can't afford a slow, fragile supply chain for the brains of the entire platform. So I'm watching this like a long-term operator would. Not, is this good news or bad news today, but does Tesla have a resilient path to compute scale? If AI6 capacity ramps smoothly, it's a tailwind. If it stalls, it could slow the cadence of FSD improvements, Optimus milestones, and data center expansion. Now let's jump to Wall Street because this is where the narrative is changing in public. Bank of America upgraded Tesla to a buy with a $460 price target, and what stood out wasn't the target price, it was the framing. They suggest around 52% of Tesla's enterprise value could be explained by the future robotaxi business. That's not a small adjustment. That's a re-rating of what Tesla is. It's basically Wall Street saying, we're no longer valuing Tesla primarily as an automaker. The center of gravity is shifting toward autonomy and network economics. And for the stock, that matters because markets don't pay premium multiples for manufacturing. They pay premium multiples for scalable software platforms, networks, and recurring revenue that expands with usage. But here's my question. Is the market pricing robotaxis too early or still not enough? The honest answer is both can be true depending on your time horizon. In the short run, robotaxi expectations can inflate faster than the operational reality. In the long run, if Tesla actually delivers a safe, scalable system, the upside is so large that early skepticism can look like a bargain in hindsight. Now, the engine that determines which reality we get is data. That's why the third update matters: FSD usage data coming out of South Korea. Reports indicate that within about 100 days of launching supervised FSD, Tesla accumulated over 8 million kilometers of driving data. That's a huge number, and it matters because autonomy is not just a model, it's a learning loop. Think of it like this: Tesla has millions of cars distributed across the real world. Every day, they run edge cases through real roads, real weather, real human behavior. That creates a data set that is extremely hard for competitors to replicate without a similar fleet footprint. And this is why I keep saying Tesla's biggest moat is not a single feature, it's the feedback system. The fleet drives, the data accumulates, the model improves, the update ships, and the fleet gets better again. That loop is what turns time into advantage. Now, let's connect it to the fourth update, Optimus. Elon Musk recently said Tesla could be the first company to build humanoid AGI-level robots. That statement is going to trigger two reactions. The first reaction is excitement. The second is skepticism. And honestly, skepticism is healthy. But instead of arguing about the headline, I want to focus on the strategy underneath. The key idea is shared intelligence. The AI stack that helps a car perceive the world, plan motion, and act safely is closely related to what a robot needs to do in a factory, a warehouse, or eventually a home. Different embodiment, same core problem: perception, prediction, planning, and control. So, when Tesla invests in chips like AI6, that investment doesn't belong to one product line. It's platform infrastructure. When Tesla grows FSD miles, that data doesn't only improve driving, it strengthens the entire vision and control stack Tesla can reuse across mobility and robotics. This is the hidden leverage most car company models completely miss. Now here's the real synthesis. These four stories aren't random. They're a chain. Chips expand compute. Compute accelerates training. Training improves FSD. FSD is the backbone for Robotaxis, and the same AI foundation can extend into Optimus. That's why I see Tesla as a company trying to unify AI, mobility, and robotics into one operating system for the physical world. Of course, the road is not smooth. There are supply risks, regulatory timelines, and the brutal difficulty of turning demos into durable products. But as a long-term investor, I care less about the noise and more about whether the flywheel keeps turning. More compute, more data, more capability, more deployment, more revenue, more reinvestment. Now let's check the stock. Today, Tesla is up. It regained $400 and it's currently around $403. And I'll end with this long-term mindset. If you believe Tesla can execute on autonomy and scale it responsibly, then the day-to-day volatility becomes background. The real game is whether Tesla becomes a platform that sells intelligence into multiple markets, not just cars. If you enjoyed this kind of connected analytical breakdown, subscribe for daily Tesla insights. Thanks for watching, and let's keep building a clearer picture of the future together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.